Hello everyone to the last day of this very important webinar of F5 Performance Management June 21 attempt. This is your instructor Rizwan Mania. Before I start with the session, the last session, the very important session, so just quickly confirm, can you hear my voice? Is the sound clear to all of you? Is the video clear to all of you and the screen as well? Okay, thank you very much for your quick confirmation. Before I start with this fifth session, today's one, what's your feedback up till now for the last 4 days, the topics that we covered, the new techniques? So what's your feedback overall? Okay, was the session confidence booster for all of you? The new techniques, the $1,000,000 techniques and all. Especially the confidence, yeah, that's very important. Is the confidence in getting higher? That's very important. Okay, that's good. That's really nice to read your feedback that your confidence has gone up, though you didn't like the paper. So that's good. So I hope you do pass performance management and with good numbers. Let's not uh, finish the hard work. Let's continue. Let's keep it going on till the exam day. And as I mentioned earlier, that I will be with you till the last day. So before I proceed the today's proceedings, uh, today is the fifth day where we are starting with advanced costing technique. I hope the 15 hours of this webinar must have improved your confidence and would have given you new things to learn. So now today's agenda, we'll start with life cycle costing. Then I will relate this with EMA as well on a slide basis. Then we'll move towards the past paper question, the very latest past paper question that is still not available on the ACCA website, but this was something that I found out through the examiner report. Then I'll give you a recap of target costing. Then we'll move to the very important throughput accounting, which normally is difficult for many of the students and they do struggle a lot. So I'll try to make it easier for you. Then we'll start with another question. Then we'll move towards certain section A, OTs of examiner report, especially when the OTs are mentioned in examiner report. So those OTs are really important. Okay, so I will definitely be telling you I'll solving these OTs, plus I'll share the document with you as well that includes all the objective test questions of examiner reports, because normally examiner when you see the OTs in the examiner report, this means that these were the one where people were struggling a lot. These were the one that people found difficult to solve. So it will be really nice for you to really understand and you need to solve all those. So I'll share that in the WhatsApp group as well. Then very important last Q&A session for information technology. Isha, I will give you the update what I'm going to do. Okay. The same plan continues. Session break 9:30 to 9:35, 10:30 to 10:35, and here we go. Yeah, one more thing. Those who are new to the session today, who are still not part of my WhatsApp group, this is my number. Make sure that you all are in my group. So I'll send you the link once you give me the send me the WhatsApp message. Plus today I will also be sharing the document, the index of BPP book and the chapters that you have to read. So I'll share that as well at the end of the session. So be with me till the end of the session. There is no need to leave the session because every minute, every second of the session counts and will help you to ace in your June F5 performance management exam. So let's begin with the first area, life cycle costing, and I will relate this with EMA as well. So please just be with me. Now, life cycle costing, basically, if you look at the word costing, okay, and if you just break this into two areas, so it's life cycle and you see costing. So it's very simple that you are doing costing for the entire life, okay? So it's the costing that you're doing for the entire life, and how exactly you're going to do this. So just understand the basic definition of this technique, and that definition is very simple, straightforward, and that's it, that entire life revenue. Now, entire life of a product, obviously, and one more thing I need to tell, that mostly people are not clear that life cycle is a controlling or a planning technique. So it's a planning technique more, right? It's a planning technique because you estimate the revenues based on the product life cycle. So you estimate the revenues, you estimate the cost of that product for the entire life, and like this you work out the true profitability. If someone asks you what is life cycle costing, okay, what is life cycle costing, so listen my friends, your answer should be, or I would say the next thing that should come in your mind is entire life revenues. Means entire life, you expect a product to have a life cycle of maybe 3 years, maybe 4 years, maybe 5 years. So you will estimate the revenue of that product for 3, 4, or 5 years. And on the other hand, you will also estimate the cost of that product for 3, 4, or 5 years, right? So entire life revenues minus entire life cost will give you the true profitability of the product. So now this is also an estimated profitability of the product, right? So my friends, this is the basic definition of life cycle costing. It's a planning technique. You plan the estimate, sorry, you accumulate, you work out the entire life revenues, you add those together, you match that with entire life cycle cost, the expected cost, and then you arrive at the true profitability of the product. And like this, you take a decision about the product development or not. Now, it's very important to understand one thing here, and that is when it comes to entire life cycle cost, so you need to understand that you have to consider all types of cost, and there's a big misconception especially in this area. So you have to consider the entire, sorry, you have to consider recurring cost of a product, okay, recurring cost, and you also have to consider the one-time cost. Okay, recurring cost and the one-time cost. Now, what is a recurring cost? Can people hear my voice? Okay, okay, Mikkel, congratulations that you are getting married tomorrow. Have a nice life ahead. I hope it goes well for you. Best of luck, okay, for your future. And I hope this your marriage life gives you a good chance to pass your exam as well, okay? So now, recurring cost and one-time cost. So it includes all types of costs, the recurring cost and one-time cost. Now, what is a recurring cost? A cost that you know that will incur every time, like production cost is something that you will incur every time. Like I would say distribution cost is what you will incur every time, right? So recurring cost, the continuous cost, and the one-time cost. Now, if I say what is one-time cost, so obviously it's the research and development cost. That's a one-time cost, and this research and development cost obviously basically is one time you will incur that at the initial stage of the product life cycle. So you can't ignore any cost that pertains to the product. Any cost that you have incurred for the sake of the product, you have to consider it. You can't ignore that, okay? So this is the mindset that you need to have in your mind, that you have to consider all the things, entire cost needs to be considered, right? Okay, now if you want any modern example, so I would say life cycle costing is really suitable in today's 21st century. Why? It's because that so many products these days are a one which you can relate life cycle costing with, because those products life cycles are short, right? Like for example, you can say an example of a cell phone normally has a short life cycle, right? Every model I'm talking about. Same goes for cars is something you can use life cycle costing on that as well, right? You can even apply life cycle costing to for example, any production you're doing, like a movie, right? Estimated life of that movie, how much it will be, and you can estimate the revenues and the cost. Okay, so you need to realize the fact that life cycle costing is useful in modern environment, just because in today's environment the product life cycles have become shorter and shorter, and the shorter the product life cycle is, Umair, the more useful will be life cycle costing as well. And I'll further come to this point later on when I move towards the advantages. Okay, so that's fine. So you have to cover all types of cost, every cost that relates to the product. Okay, including environmental cost, Okay, now what is environmental cost? So I'll jump towards environmental management accounting here to give you a slight idea that what exactly EMA is about. Now, when I come to here, environmental management accounting, so you need to consider the fact that when you are planning to produce a product, okay, for example, you are planning to produce a product and that will have a life cycle of 7 years, right? That will have a life cycle of 7 years. So now after 7 years, for example, you took the land from the government on lease. Okay, you took the land from the government on lease. Yeah, video games is a really good example. Again, video games life cycle is also short and you use life cycle costing, right? So as I was saying you that you took a land on lease from the government, and that was for maybe for 7 years, right? So the time you took that land from the government, that land was, very good, very grassy, so good, the land was well maintained. That piece of land was well maintained with complete farming done on that land. It was awesome, right? So you took that land from the government for 7 years. Now you will start your manufacturing there, and you will be manufacturing chemicals. Okay, so what will happen? Okay, can people hear my voice? I don't know whether it's okay or not. Is the voice okay to everyone? It's okay, right? Great, thank you. Okay, now, so I'm talking about the land, right? So that piece of land, when you start your manufacturing there, so because of the chemical reactions and all the grass, started getting off. Okay, and it was kind of a desert now after 7 years, right? So at the time you did the lease agreement with the government, you took a promise. You did a promise that, okay, what we'll do is that by the time we leave this land after 7 years, so it's a promise that we will ensure that land will be in the same condition as it was 7 years before, right? So this is your dismantling cost, right? You know what is dismantling cost, right? So this is your decommissioning and dismantling cost. So now this is your decommissioning or dismantling cost, and this is a cost that you will incur after 7 years, and you have to incur after 7 years. Are you getting my point, everyone? So now, if today, when you haven't started the production yet, okay, and when you're just estimating the entire life cost, you know that you have to incur a very heavy cost after 7 years, and that's your decommissioning and dismantling cost. Now you will be a big fool if you will not consider that cost in your current costing. Because if you won't consider that, so you will see an overstated profitability, which in actual will get low just because you will incur this cost in 7 years time. So my dear friends, life cycle costing technique is trying to give you this point that, okay, when you estimate the entire life cycle cost, please also include environmental related cost. Maybe it is expected that you need to pay certain penalties and all, you need to pay certain regulation costs and all. So include all those environmental costs in your entire life cycle costing. Include the decommissioning cost, dismantling cost, disposal of inventory cost, maybe the permission cost or the regulation cost. You have to consider all these costs in your current costing, so that when you are paying that cost later on sometime in future, it should not reduce your profitability, and you might not think at that time, oh, what I've done, I did a big mistake by not considering it because my profit went down. So that's important. That's the message from life cycle costing, that include all the costs including environmental cost. Agreed? So that's very important to understand. So it's clear now, the definition of life cycle costing. You have to consider all types of costs including environmental cost. Because I am right now at environmental management accounting, so I need to put up certain important things for that as well, and I'll go back to life cycle costing. So when I say environmental cost, so generally you need to understand the fact that this environmental cost is generally hidden under the head of overheads. Okay, so you all know what overheads are. Overheads is an area which includes the costs that are not directly related to the product. So normally environmental cost is part of overheads. Like for example, I can give you a quick example here, like electricity, like water bills, like gas bills. Very simple example. Now you might be thinking, why water, gas, electricity is considered as an environmental cost? Yeah, you are clear that it's hidden in overheads, but you might not be clear that why it is considered as an environmental cost. So it's very simple, my friends. Excessive consumption of electricity, excessive consumption of energy, water, gas, done by an incorporation, done by an organization, is actually getting problematic for the society. Because if you go for an excessive use of that, that means that there will be scarcity of these resources in the society. So that's an environmental cost, for example. So normally environmental cost is hidden in overheads, and you need to find out and then you have to reduce it. Okay, so this is basically environmental cost that is hidden in overheads, and I gave you example. Plus further things that can come under this head of overhead is maybe you paid some kind of a regulation to the government, like for example you took permission for this chemical business, plus you paid some fines and penalties. Maybe this is also part of this overhead, and this is basically your environmental cost that you need to search, that you need to find out and reduce it. Okay, now I'm categorizing this environmental cost into two areas in front of you. One is the internal cost and second is the external cost. Okay, internal environmental cost is a one that basically is bared by the company. It's the company that will bear the internal environmental cost, and external environmental cost is a cost that is bared by the society. It's the society, is the public who will bear this cost because of company, right? So let's quickly go through these types of costs. Like internal cost includes improved systems in order to avoid penalties. Yeah, for example, you have a business of chemical and carbon emission is your major issue, right? And people, suffer a lot due to this carbon emission. You go for a huge carbon emission, people who are living nearby, they are facing massive problems, right? So you have installed a system in your organization or maybe the government has told you that come on, let's install this important system, because excessive carbon emission means that we'll put heavy penalties or fines on you. So what you did, you installed a very good sensor system, and that sensor system will actually indicate the top management or the people who are part in the operational management that when there is excessive carbon emission, just give us a signal so that we reduce it and we avoid the penalties. So this is an internal cost that is bared by the company in order to ensure that nothing is getting outside, or people are not suffering from that. Another example is waste disposal cost. That's quite obvious. Product take back cost, a very good example I have here. For example, you have seen that cartridges that are used in the printers. Everybody knows about printers, okay? And there is a cartridge there in the printer through which you take out the printouts and all, right? So it's not good to actually throw or dispose of these cartridges if you're not disposing it properly, so that can have a serious environmental consequences. Okay, so now to avoid people not properly disposing these cartridges, the companies like Epson and HP, what they do, they give you an offer to the customers. Hello customer, if your cartridge is done, it's empty, just don't throw it, just bring that back to us. Okay, just bring that back to us. So people go there and they just go there and they give them the old cartridge, and when they buy the new one, so company offers them a discount as well. So basically the idea is that okay, you bring the old one and we'll give you a good discount on the new one. Let me repeat it. You bring the old one and we'll give you discount on the new one, and that is basically your product take back cost. So it's deliberately done by the companies. Companies do want people to bring all those back. Okay, and in that case the discount that the company is giving just to ensure that people bring that back is a product take back cost example. Along with that, if company goes for a proper disposal, so the cost is being incurred by the company, so that is also an example of product take back cost. Okay, so that's product take back cost. Then as I mentioned, regulatory costs, taxes, as I mentioned about decommissioning, this is all internal cost that is bared by the company. On the other hand, the cost that is paid by the society, right? That's the excessive usage of water and energy done by our corporate sector. Use industries or factories are in one area. For example, in Pakistan, Karachi, there is a site area. People know about that. So there are so many factories there. So because they use so much of energy, water, gas consumption, that creates scarcity in that particular area for the people who are living there. So that's something that is paid by the society because of the company excessive usage. Yeah, Ahmed, you're right. It's the textile industry in Pakistan as well. Then forest degradation, a company that basically is involved in making papers. Okay, a company that basically is manufacturing papers, it's producing papers. So what they do, they cut the trees, and the cutting of the trees is basically harmful for all of us. It's harmful for the human life, it's harmful for the wildlife. So it's really bad for all of us, because today you know that less the forest, so there is more global warming, and all the issues are increasing, right, for the entire planet. So this is basically forest degradation. A paper manufacturing company will go for maximum cutting of trees, and that can have a harm for the entire society, right? So that's again the external cost paid by the society. Healthcare cost is very simple. Maybe you have seen in every country, I think, but very much in Pakistan, or I would say this country that are part of Asia, or the third world countries, I would say, where there is so excessive population, high population, and when there are peak hours of the day, so you can see lots of traffic on roads. It's in Pakistan, it's in India, it's in Bangladesh. You have seen that. It's in Sri Lanka, where there's a massive traffic in peak hours. And in that peak hour, obviously there are so many cars, buses, and other transport modes, and that all results in, carbon emission and all. So that is basically hitting the human life. People who are moving around at that time on roads, they suffer. Okay, so that's hitting your health as well. So that excessive pollution is hitting your health. So that's again your health care cost. Okay, then you have this carbon emission. Yeah, obviously it's again bad for the human life. So these are what are known as external costs. So what is the role of the government here? So government is trying to convert this external cost into internal cost. Government is trying to convert this external cost into internal cost through fines and penalties. Okay, through fines and penalties, government is trying to convert external costs into internal cost. Okay, so I hope this is clear. Normally you need to understand the difference between these two, so I've done that. Plus it's very important to keep in your mind that these are the costs that are normally hidden in overheads, and from that you can just figure out the internal costs I'm talking about, and then you can reduce the impact of that on the company as well as on the society. So yes, what does life cycle costing says? Everybody, are you with me? Is my explanation good? Is my explanation up to the mark? Say yes or no. Okay, that's nice. Okay, prevention cost means you have installed certain systems that will not result in an error. Okay, you have installed certain systems that will prevent the environmental cost being arised, right? So that's preventative cost. And detection cost means you have systems to detect whenever the environmental cost actually arises, right? So prevention actually prevents that cost being arised, and detection cost will detect and will tell you, okay, this is where environmental cost is being arised, right? So I hope this is clear to all of you. Great. Now going back towards the life cycle costing, again I just connected life cycle with EMA just to cover both the things in one way. So this is what I've done here. So I hope this is clear to all of you. So coming back to the concept of life cycle costing, which says that you have to consider the entire life cycle cost, that is entire life cycle revenues and entire life cycle cost, in order to find out the true profitability of the product, right? So that's done. Now I think it's time to move towards a question, and let's further discuss things through the question. It's section B again. One very important thing, today's topic, or I would say today's section of advanced costing technique, that includes ABC, that includes target costing, that includes life cycle costing, that includes throughput accounting, that includes environmental management accounting. All of these five basically will only be tested for section A and B, and will not be tested for section C, will not be tested for CRQs. So you just have to prepare yourself for all types of OTs, especially for this section. Okay, so it's important to read the scenario and the requirements very carefully. Make sure you apply your theories and techniques and relate that to the scenario, because if it is tested in section B, so there is a scenario followed by 5 OTs, and you can't solve OTs in isolation. You can't solve this in isolation as if this is section A. No, you have to relate this with the scenario. Okay, plus it's very important to make sure that you read things very carefully so that you know how to round off the answers. Rounding off will really play a very, very important role in that as well. Okay, so let's not waste our time, and let's now move towards the first question for today. And that question, let me open the question. Just give me a minute, please. Okay. Now, this is a question that you can see in front of the screen. It's the latest question. I don't know whether any of you remember this question, because I just found out this question from the examiner report. Even ACCA hasn't published this question in the past paper as well. It was part of examiner report. Anyone who can just recall this, I don't know whether you can easily or not. Anyways, whatever it is, let's start with this very latest question that has been tested in the examination, which will give you a very good idea as to how you have to handle the things. So let's now begin with this question and let's see what to do here. Now, first of all, if I start with reading the question, so yeah. MCO manufactures air conditioning units, okay, and is considering an investment in new unit that will be used in modern office buildings, right? Advances in technology means that this unit is more sensitive to changes and variations in temperature, and therefore it can regulate airflow, heating more efficiently. MCO's competitor currently do not have an equivalent product that can offer these features. Okay, that's the unique point they have, right? MCO expect to sell 10,000 units over the predicted 5-year life cycle of the unit. So the product has a 5-year life, right? The finance director has just prepared the initial costings for the unit as follows. So let's have a look here. The initial costing includes, okay, let me just go to the area. Yeah. So it includes research and development cost. Yeah, make sure this is all in thousands. Design, marketing, variable costs per unit. It's per unit, okay? Right? Fixed production cost. Variable distribution cost is also per unit. Fixed distribution cost. Variable selling is also per unit. Fixed selling cost and administration cost. Okay. So, okay. Now, the finance director plans to use life cycle costing to measure profitability of the new product. Okay, that's fine. The chief executive had asked for more information about life cycle costing, as she is not sure whether it is the right method to use. Okay. The production director has reviewed the costing in detail, right? And suggested a couple of changes. He is enthusiastic about the product and believes that modifications could be made to prolong the product's life, but wonders when the best time would be to make changes to the product. Okay, are you all ready? Say yes or no, guys. Ready for this very new, brand new question? Yes, depreciation is part of the costing. Okay, yeah, it is part of the costing. Exactly, depreciation. Okay, now according to the question, let's begin with the first one and let's see what is the answer. Now, while I'm reading it, I want you people to think about the right options. Okay, so it's more your test than I'm solving it, right? According to life cycle costing method, which two of the following statements regarding the stages of life cycle are true? Now, before I move towards stages, I just need to give you the idea that what are the stages of life cycle. Typically, there are 5 stages for a life cycle. It's development, it's introduction, it's growth, it's maturity and decline. Okay. Now, development is basically a stage where the organization incurs massive research and development costs. Around 80 to 90% R&D cost is 80 to 90% cost is incurred in the development phase, and that includes a heavy research and development cost. Development stage is a one where you haven't yet started marketing the product. It's the development stage where you are making samples and approving the product and all, design and everything. Then comes the introduction phase where you launch the product, and once you launch the product, obviously you give discounts initially to ensure maximum promotion of the product, because at this point it's the promotion that matters rather than huge profitability. Okay. Then comes the growth stage where your big product becomes popular in the market. Now people already know about the product, and this is the stage where there is a drastic increase in your sales, and your sales goes really up, up and up. Plus, you enter into profit as well, and your position is getting better and better. Then comes maturity, where competition kills your growth. It's a high competition area where competitors are also in the business, and your sales at this point, the growth that you had starts to go down. Because if I just give you a quick idea, it's like this. That is the graph here. So at the development phase, obviously there was no sales, but at introduction phase, obviously the sales line started, you can see here. And then it was the growth phase where it was a rapid increase in the sales. As you can see, it's going up. Okay. And then comes the maturity, where you can see the time comes where the sales basically is going up, up, and then it's kind of a constant stability here. Okay. And then you see a drop in the sales. This means you enter into the decline phase. This line is basically representing your revenue, and this x-axis is your time. So it's the maturity phase where you see more stability in the sales. It becomes stable, constant sort of after going up, and that is the point where it is known as maturity. And when you see that there is a downward slope going on and sales is decreasing now, so that's the decline phase. Okay, great. So the highest competition is at the maturity phase. You need to keep this in your mind. So now let's go back to the OT and let's see what options we have. At the introduction stage, further capital expenditure will be needed, as production capacity will need to increase to meet the demand. Okay, this is the first statement. Let's read all these statements so that we can find out which are the right ones. And it says two. Okay, so there will be two correct statements. The maturity stage occurs when market Okay. Can you all hear my voice, please? Yeah, please. Yeah. Okay. I really didn't notice that. Okay. It's good. Now I was asking the answers and I just I didn't know. I was so much surprised why people are not answering me. Okay. So can you tell me the right answers here? Okay, just tell me till where it was audible to you. I don't know. I just covered the stages. Were you there with when I covered the stages? Oh, you were not there when I covered the stages? Yeah, stages were covered, right? Oh, that's good. That's good. That stages were covered. That's good. Okay. Great. Okay. Decline stage is simple. I did mention I did mention that when your sales continuously starts to fall, this means it's the decline stage, and this is the stage where sales has gone down. Okay, so stages were covered, right? Yeah, okay, that's good. Thank you. Now let's read the options again. At introduction phase, further capital expenditure will be needed as production capacity will need to increase to meet demand. Okay. Second, the maturity stage occurs when market has reached saturation point and bought enough of the product. The majority of the product lifecycle costs are determined by decisions which are made at the design and development stage. The growth stage, when sales will have reached their peak and becomes stable, will be the most profitable stage. Now, can you tell me the right answers first of all, quickly? Okay. So let me tell you the right answer. What are the right things here? Now, let's start first with option A is the correct option. Okay, and option C is also the correct option, first of all, right? So answer basically, yeah, answer is A and C because two statements are correct. The first, introduction phase, yeah, requires further capital expenditure because it's the introduction phase where you see, okay, the demand is actually increasing for your business, and if the demand is actually increasing for your business, so you definitely need to figure out, okay, that's fine, so let's start the capacity increase so that we can take up the things. Okay, fine, clear, done everybody? Okay, now, okay, let me explain. Is A clear to all of you? Yeah, obviously, new machine you need to buy. Okay, capital expenditure could be a new machine that you need to buy, right? You started the production, demand is slightly increasing. Now you had limited capacity. You can take an example of a car, right? When a car manufacturing company actually starts the production, so initially they keep it very limited, and once they see, okay, the model is running and the shape is really good, so they increase the capacity of the car manufacturing by going for a new production line. So that's the best example. Okay. Second, the maturity stage occurs when market has reached saturation point and bought enough of the product. Okay, now maturity is not actually this stage. This is basically your decline phase where you can see that market has bought enough of your products. Okay, so it's basically the decline phase and not the maturity phase, because in maturity phase you are in profits. Actually, what is maturity? You can see it's like this, the line is going up and then the sales become stable at the maturity phase. Okay, so it's not in a stage where enough products have been sold. It's not the stage, right? because sales is growing in maturity, but at a decreasing rate, not at the same pace at it was when it was in the growth phase. So the growth rate, I would say, is on a declining trend, but still there is a slow growth, and also a point comes where one can say, okay, now this is the position of a stable condition. Okay, so this is something that your sales become stable, right? So basically this statement that this statement basically relates to decline phase and not to the maturity phase. It's basically a feature of decline stage. Getting the point? So that's wrong. Third statement is, that's obvious. Majority of the product life cycle costs is incurred at the development phase. As I just showed you here as well, 80 to 90% cost is incurred in the development phase. Okay, clear? Fine. Last, at growth stage, when sales have reached their peak and become stable, will be most profitable stage. No, that's wrong. Actually, this is not a growth stage. Actually, this is a maturity stage. Okay, it's a maturity stage. Yeah, it's a maturity stage, because this is the stage where your sales is increasing and then becomes stable, and because it is a stage where you have reached your peak. Now this is your peak. Okay, this is your peak. This is your peak. Okay, so this means highest number of units you are selling at this point. Okay, highest number of units you are selling at this point, which means your total profit for all the number of units, collective profit for all the number of units will be highest. So in maturity, it's the level where your profit is highest for total number of units, because your units are highest, so obviously your total profit will be highest as well. Okay, so that's okay. Now so it's basically the explanation of maturity rather than growth, so this is also wrong. Okay, I hope this is clear, and the answer is A and C. Okay, that's fine. Now second one, what is the cost per unit for new air conditioning unit using life cycle costing? Now let me tell you here, two famous questions that can be tested for life cycle costing are what? Let me tell you, two types of questions can come for this topic. Two types of questions. One would be asking you about to calculate entire life profitability. Okay, and how will you calculate? I'm giving you a simple formula for that. Entire life profitability, how will you calculate that? You can see here, entire life revenue, just work out, and then work out entire life cost, and then you will get entire life profitability. So this is basically the formula to calculate entire life profitability. Okay, this is the formula. Entire life revenues, entire life cost, true profitability. Done? Clear? Okay. Second, the other famous calculation that can come in your exam for life cycle costing is entire life cost per unit. Entire life cost per unit is the second famous calculation that can come in your examination. Yeah, maturity is the most profitable stage for the business, because highest number of units you have sold there, which means that your total profit for all units will be highest. Clear? Okay. Now, entire life cycle cost per unit, how will you work out that? This is the second famous question for calculation that can come in your exam. There are two. The one I've made it clear, entire life cycle profit, and second is entire life cycle cost per unit. So for that, I'll move towards the question. It's the same thing that they're asking here. Life cycle costing cost per unit for the new air conditioning unit to the nearest dollar. So this is very important to read the requirements in OTs. Now, how to work out this? What is the formula? Let me tell you the formula for the second requirement. It's very simple. Calculate entire life cycle cost, divide by entire life units. Entire life units. It's a very simple way out to work out this. Entire life cycle cost divided by entire life cycle units will give you the answer. So that's not at all difficult. That's not at all difficult. Let's see how we'll work out the entire life cycle cost first. So let's go to the information above and let's do the calculations quickly here. Please be with me, everybody. So let's start with research and development first. Now, what I'll do, I want you people to help me out here as well, so that we can quickly work out the numbers. Now, first 6,200 as it is, you will take, no issue in that. Okay. Should you take this cost? Yes. Design cost as it is? Yes. You will take that as well. Marketing? Yes. You will take this cost as well. Variable production cost per unit. It's variable production cost per unit. Okay. So what we need to do in this case, everyone? So it's simple. I'll do a working 42 multiplied by 10,000 units. Okay. Right. So take this total here. Then fixed production cost. You will take as it is? Yes. Then variable distribution cost is per unit, so 9 into 10,000. That's fine. Then fixed distribution cost as unit, as it is. Then 4 into 10,000. Okay. Fixed selling and administration. Everything you need to consider. So just add these all together. Just add these all together and tell me what is the total life cost that you are getting. Can any one of you help me out here? What is the total life cycle cost that you are getting? Anyone who can figure out quickly? Okay, thank you. It's 907 345, and remember this is in thousands. Okay, so three more zeros here. Yeah, this is in thousands, divided by entire life cycle units, and those are 10,000 units. So what is the answer that you are getting here? Which option you think is the right answer? So it's 90735. Nearest, right? What cost do you avoid? The only cost that we avoid normally is an opportunity cost, Sajid. Opportunity cost is not part of this. Normally, we have to consider entire cost that pertains to the product manufacturing. Just remember a simple rule. Any cost that pertains to the manufacturing of that product, okay, will be considered. Okay. Yeah, we don't consider the opportunity cost. Okay. Because of making one product, whatever we are losing, we don't consider that. Agreed? So I hope this is clear. No issues at all. The workings are simple. So it's 90735. Yeah, 90735. So let's go here and look at the options. Yeah, it's D. It did mention to the nearest dollars. Okay, so the nearest dollars. So exactly what answer you were getting here? If I just quickly tell you the exact answer to clarify the decimal issue. Okay, you are getting the answer of 90734.5, right? Now to the nearest, it said, listen, if this would have been a fill in the blank question, fill in the blank. So if you input this 0.5, that would be considered wrong. If you write 90734, so that is also wrong, because The question mentioned to the nearest dollar. And because you have this 0.5 here, so this is basically giving you the clear idea that you have to make this as 90735. Okay. So it's not round down, it's round up. Okay, it's round up. So 0.5 is the criteria to remember always, always, because people do struggle a lot in this. So if it is zero point 0.5 or above 0 0.5, so you would have written 90735. But if it is like 90734.3, if there is 0.3 or maybe 0.2, in short, if anything is less than 0.5, so then round down would be the case where you would have written 90734 would be the right answer in that case. Okay. So this is a very small mistake that people generally do, and they lose easy 2 marks. Easy 2 marks, you lose it in the exam. That's wrong. Agreed? Clear? So I hope this is clear. The criteria of 0.5 is clear to all of you. It's 0.5 or above that, so round up. Otherwise, round down. Done? Okay. So this is the answer. Clear, everybody? Depreciation will be considered. Yes, you will consider depreciation because it's the asset cost, right, that you are charging to profits. So that's fine. Okay. Next, the production director suggested the following change for the costing of new unit. Currently, the material costs are 20% of the variable production cost per unit. Okay, what is the variable production cost? Let's go above and let's have a look. It's 42 into 10,000. Okay, 42 into 10,000. So this basically is your production cost, and how much is the figure that you are getting. So you can quickly work out that as well. So it's simple, no issue, right? So that's 42,000 for you. Okay. Now you can see here that this is the figure that you are getting, and because the units are 10,000, the per unit is 42. So now, okay, so you can see here, what are you getting here? It says one of the material used is stainless steel, which is bought at 2,000 per unit. But an alternative corrosion resistant metal costing 25% less can be used. Okay. The production director believes a 15% discount can be negotiated for the remainder of the material, right? What would be the revised material cost to the nearest whole dollar? Come on, guys. I need your answers quickly. It's not that difficult. Okay, you can work out. So you have just a minute to work out this. Okay, are you ready? Quickly, I need answers. Yeah, I'm giving you time. Yeah, I'm giving you time. You have 1 minute or so to work out this, okay? Because we are almost at the time of break as well. So it's 9:30 here. So what do you think? Let me give you time for break and for solving this together. It's a bit challenging. That's why I just want you to give time. Okay. So let me give you the break along with the time to solve, right? So it's 9:30 here. 9:35 I'll resume. Okay. And 2 minutes you have to solve this as well. So right after the break, I tell you the answer of this as well. Right? Okay. So it's time for the break. Variable cost per unit is 42. Okay, great. Do give me the answer after the break. Okay, welcome back from the break. I hope you have worked out the answers. I can just see one answer, so that's disappointing. Anyways, now let me tell you. The variable production cost per unit is 42, and you need to work out answer per unit only. Okay, so you don't need to multiply with the number of units here, because you need to keep it per unit. Okay, so that's was the confusing part. Anyways, it's 42,000 if you remember, because the workings that were given to you here were in thousands, so it's 42,000 here. Okay, 42,000. Now what you're going to do is 42,000, and 20% of this is your material cost, which basically is 8,400 is your material cost. Okay, that's fine. Now what it says one of the material used is stainless steel, which is budgeted at 2,000 per unit, right? So out of this 8,400, there is one material that amounts to 2,000. Okay, that amounts to 2,000, right? So if I deduct this 2,000 from 8,400, so I'm left with 6,400. Okay, so I'm left with 6,400, because this 2,000 basically uh, is a material which you will source at 25% less. Okay, which means this 2,000 is something that you can source for 25% less. So what you can do is you can work out, you can multiply this with 75%, and let's see what will the cost of this 2,000. So the cost of this 2,000 will be 1,500. Okay, the cost of 2,000 will be 1,500. Getting everyone right? Okay, so this is 1,500. Now for the remaining, what it says, the production director believes a 15% discount can be negotiated for the remainder of the material. So the remainder is 6,400, right? So for this 6,400, you can avail 15% discount, which means if you multiply this with 85%, so you will get the figure of how much? 64 into 0.85 is 5,440. Okay, so for this remainder you will get 15% discount, so it's 5,440 plus 1,500, and the answer is 6,940. Okay, so 6,940 is the right answer. Getting everyone clear? Because there is no decimal here, so no issues. Directly 6,940 is my answer. So I hope this is clear to all of you, because I did my workings in full numbers. So it's clear. 6,400, 2,000 separated, 25% discount applied on this one, and 6,400 separated and 15% discount applied on this one. Let's add these two together, and the figure is 6,940. Okay, so I think this is clear to all of you, and this OT is all good to understand, right? Okay. Now, next one. The production director has also asked about implications for production planning if company wishes to extend the product life cycle. What implication, what impact will be on production planning? How you get 42,000? That's the most easiest thing. 42 per unit, right? And this is in thousands. So this is 42,000. Okay, this is in thousands. Okay, so this is 42,000, right, Amrita? Okay, now for question 4, what impact will be on the production planning if company want to extend its product life cycle? Extend its product life cycle. So what impact this will have on the production planning? So can you tell me what impact will this have on production planning? At what stage of the life cycle is the new unit cost likely to undergo product development? Now this is a very good objective test question. Yeah, okay, Priyanka, that's fine. Is this clear to all of you, right? The calculation part needs to be done per unit. Yeah, it needs to be done per unit. Ahmed, I already mentioned 42,000 per unit is the cost. 42,000 per unit is the cost. Why you are not understanding? The figures were given in thousands. So that's why it's 42,000 per unit, and the answer needs to be worked out in per unit, okay? Understood? Okay. Now, uh, if the company wants to extend the product life cycle, so can you tell me 15% discount is given here. So if you take 85% directly, so this means you've applied 15%, right? Okay. Okay. Now, can you tell me if the company wants to extend the product life cycle? So when you take a decision to extend the life cycle, come on, can you tell me when you take the decision to extend the life cycle? Maturity. Maturity is mainly when you start doing the planning. No, maturity. Maturity is where you start doing the planning. Yes or no? Because at maturity stage, you start doing the planning and you say, okay, at this maturity stage, we can extend the product life cycle. And what you do, you start doing new development stuff like that. You bring a change in the product so that you know extend the life cycle. So in maturity, actually you start doing the planning, because in decline things are out of your hand. Because in decline things are out of your hand, it's decline phase. So in maturity, when you feel like okay, things are going bad slightly, that is the point where you start doing planning, and that is the point where you start uh, uh, thinking how to extend the life cycle of the product. Okay, so it's the maturity phase, not the decline one. Are you getting the point, everyone? Okay, clear? Maturity is not before growth. Growth is before maturity. Okay. Yeah, in maturity you differentiate your product, but when you see okay, now when you want to extend the maturity phase, how can you extend a life cycle in decline phase? Are you getting the point? It's the maturity where you say okay, now I have to extend the life cycle more, so let's do some innovation stuff like that. Yeah, okay, it's the maturity. Clear? Right. Then the last one, 5. The chief executive wants to be briefed on the advantages of using life cycle costing. So for that, let's jump towards advantages and complete the topic. Quickly listen. Life cycle costing is useful for pricing decisions. Why? Now, because you know the entire life cycle cost, as you just worked out in this question as well, because you know the entire life cycle cost you know per unit cost. So it helps you in pricing decisions, because you know you can change your price stage wise, which means in introduction you keep a low price, in growth you increase the price, in maturity again you decrease the price because of competition. So you have to take lots of pricing decisions. So how this is done? Because life cycle costing provides you the entire life cycle cost per unit, and considering the entire life cycle cost, you can take different prices decisions in different stages, and this will help you to make sure that you are not doing loss anywhere. So you know the average entire life cycle cost per unit, and by looking at that you can take your pricing decisions in different stages. So yes, it helps you in pricing decisions. Clear? Second, products where 80 to 90% cost is incurred in the development phase. Products where 80 to 90% cost is incurred in the development phase, like games manufacturing, like movie manufacturing, like cell phone manufacturing, like computers manufacturing. Major cost is incurred in the initial phase. So when major cost is incurred in the initial phase, life cycle costing is useful for that, because at initial phase you can compare the entire life cycle costs with entire life cycle revenues, and you can reduce the cost at initial phase. Getting the point? Because you can reduce the cost in initial phase, because at initial phase you can quickly match these two expected figures to see whether you will end up in profit or loss. So products where major cost is incurred in the development phase, life cycle costing is useful because it helps you to reduce the cost initially. Okay. And when you are able to match revenues and cost at the initial phase, you can take the right decisions whether to make the product or not. Because at initial phase, if you feel like that profitability will not be that much, so you will avoid the manufacturing of that product. At the initial phase, you will take a decision, okay, hello, we don't have to go for that. Getting the point? Great. Target cost. Target cost. Now listen, what I'm covering here is target costing along with this. Listen, everybody. See my linking that I'm doing here. Now I'm jumping towards target costing section here. Quickly. What is target cost? Now, what is target costing? This is a technique. This is a technique that you apply when the product is in its development phase of life cycle. Development phase. When the product is in its development phase of the life cycle, you go for target costing. How beautifully I've connected two topics with life cycle. You saw, I started life cycle, went to EMA, connected EMA with life cycle. Now I'm again at life cycle and connected target costing with that. This is the connection through which I'm covering the syllabus as well. Understood the approach? So listen, this target costing is used in its development phase. When the product is in its development phase, you use target costing. And what you do? When the product is in development phase, you determine a market price. Okay? Through the survey. Through the survey, determine a market price. After that, you determine the desired profit. Okay? And then you calculate the target cost. So you know the formula of target cost, current estimated selling price minus desired profit is target cost. Okay. Now the word target cost is what? Target cost. So you have worked out for yourself a target that this should be the cost. Then you compare this cost with the current estimated cost, means the cost that will arise if you start producing it right now. Current estimated cost. So you compare the current estimated cost with the target, and the difference of current estimated cost, the cost that will be incurred if you start manufacturing it right now. You compare this with the target and you find out the cost gap. The cost gap. So according to this technique of target costing, which is used in the development phase, this cost gap needs to be closed down. You need to close this cost gap. So in the development phase of the product life cycle, at that stage, you think how to reduce the cost gap, how to drop the current estimated cost to target cost. And this is done by very simple. Go for cheaper material, go for cheaper labor, reduce the overheads, but make sure in doing all these things, no effect should be on quality. No impact should be on quality. Okay? The other options include, you can move from labor to machine intensive. This helps a lot. How? This helps a lot. How? Because machine intensive means less wastage, less losses, less human errors, and all these things less wastage, losses, stoppages. All these things will help you to reduce your cost. Less losses, wastage means less cost. So that's an option. Plus, you can benefit from economies of scale. Now, what is economies of scale, my friends? Economies of scale means what? Economy of scale means that the more production done, your cost per unit goes down. And you know why? Because your fixed cost spreads over more number of units. Plus, when you go for a massive production, you get material discounts as well, and that helps you to cut down the cost as well. That's economies of scale. Plus, performing value analysis. What is that? Identifying value adding features. Identifying value adding features and eliminating non-value adding features. So you identify value adding features and eliminate non-value adding features. So once you eliminate non-value adding features, you reduce your cost. Elimination of non-value adding features helps you to what? Reduce the cost. Okay, so this is value analysis. So this is what you do in the planning phase of the life cycle, development phase of the life cycle. Understood, everybody? Yes or no? So that's the benefit of target costing. That's the benefit of target costing. That if you use target costing, market-based price is what you decide, because you conducted a survey, and this survey will help you to give the best price for the product. Plus, new working methods will be identified. New working methods will be identified. Now, what is new working methods? Listen, the way I'm covering up the things, I'll make it easy for you. New working methods. Obviously, when you want to reduce the cost gap, you think about new ways. The best example is move from labor to machine environment. New working methods. I'm really choosing selected content and words will give you a best revision as well. Okay. So yes, new working ways will be identified. Plus, it will help you to determine customer requirements. How? It's very simple. As you conducted the market survey, you know what customer wants, what customer doesn't want. And this is what you can incorporate in your value analysis. Keep features that customer value, eliminate those that don't value. Okay. And last, which is the most important one, it helps you to reduce the cost. It helps you to reduce the cost at development phase, product lifecycle development phase. So it helps you to reduce the cost at development phase. Agreed? Clear? Okay. Right? Now, do you want to learn the advantages? Say yes or no. Do you want me to make it easy for you to learn the advantages? Yes? Let's do it. PWC square. Have you ever heard PWC, anyone? PWC. Come on, tell me, what is PWC? Price Water Coopers. Price Water Coopers, right? Anyone working in PWC? Or anyone who wants to work in PWC? Okay, so it's Price Water Coopers, Big Four audit firms, right? So the shortcut is, the mnemonic is P for price, W for working method, C for customer requirements, another C for cost reduction. Okay, so the mnemonic is PWC square. Done? Great. So I've covered target costing very nicely, and the entire technique is used when the product is in its development phase. See the connection? Like the connection. So yes, life cycle costing, life cycle costing uh, allows target costing technique implementation at the development phase, and it helps you to reduce the cost. Okay. Now, it is useful for products having short life cycle as well. So now I'm coming back to life cycle costing. Okay. So coming back to life cycle costing, life cycle is useful for products having short life cycle. Can you think about this? Why? Yes. Can you think why? It's very simple. Now, the modern products of today, cell phone, video games, electronic items, these are modern products, right? All these have short life cycle. All these have short life cycle. So the shorter the life cycle, listen, the shorter the life cycle, the shorter the life cycle, the more easy it is for you to estimate the revenues and to estimate the cost. The shorter the life cycle, the more easy it will be for you to estimate the revenues and the cost. The more realistic planning will be done. So useful for products having short life cycle to estimate things accurately. Now, do you want to learn these advantages as well? Yes or no? Say yes or no. Yes. So let's learn. P E R T S. Yeah, we are right now in a school. And the mnemonic is PERTS. What's the mnemonic, guys? PERTS. So can you tell me the mnemonic of target costing advantages? Come on, let's learn it. Target costing advantages. Let's learn things today. The mnemonic of target costing advantages. Oh, I'm saying target costing. Yeah. PWC square. PWC square. And what's the mnemonic for life cycle costing advantages? Life cycle costing advantages. It's PERTS. Right. Great. It's PERTS. So it's PERTS, and that's PWC squared. Getting the point? Great. Done. Okay. So done with the advantages. And now, wow, what a combination going on today. Let's solve this OT. Which of the following statement relating to the advantages of life cycle costing are correct? Now decide and tell me. Number one, it draws. Okay. It draws management attention. It draws management attention. Yeah. Okay. Now the first one. It draws management attention to all costs relating to a product which other costing method usually treats as a period cost. Come on. Is this true or false? Tell me. Is this true or false? And let me tell you one thing. Is it an MCQ? Is this question an MCQ? Or it's a multiple response? And how you will figure out in the exam? Is it MCQ or multiple response? Oh, people are not responding, man. MCQ or multiple response? That's the problem. It's a multiple response question. See the word. Following statements relating to the advantages of life cycle costing. Advantages, S. It's multiple response, which means more than one statement will be correct and could be correct. more than one statement could be correct. Yes, not an MCQ. Okay, so this is correct. Second, it focuses on measuring product costs from concept to withdrawal rather than reviewing cost on period by period basis. True or false? True or false? True. Yes. Concept till withdrawal. Start till end. Great. Done. Let's move on. Then what we have? It focuses on what consumers are prepared to pay for a product and establishes cost budgets based on expected selling prices. Is this what we do in life cycle costing? Is PERT something like this? No, 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 no. It's target costing. Yeah, great. Isha, thumbs up. Great. It's target costing that tells you what customers are willing to pay, not life cycle. For a good MCQ or multiple response solving technique is what you know. You should know which options are not correct. You should know, you should have the clarity as to why these are not correct. It's not the guesswork. All four statements, all five statements, you should know why this is the answer and why this is not the answer. If you are at this level of concepts, you're perfect. Okay, so that's target costing. Last, it aids understanding of the relationship between decisions at the design stage and the cost of other functions such as marketing. Yeah, it's true. At design stage, at design stage, you do, listen, at design stage, you do consider the cost, what will incur, and its relationship, how it will help us in the following product life cycle. So yes, at design stage, once you work out the estimated cost, so now you know, okay, the cost is getting higher, so let's try to reduce the cost. You look at the relationship of what impact the reduction of cost will have on certain aspect of other organization areas, and how can you reduce the cost, and how can you change the design and all. So every decision is taken at this phase of design stage, and this is what life cycle allows you to do, because you compare entire life cycle cost with entire life cycle revenues. Great. The first two are so simple. The first one is says using life cycle costing, you cover all the costs. So I've already covered that. It considers all the costs of relating to entire life. Okay. For example, it covers R&D costs. Normally, what we do, we charge off the R&D costs in financial books. Okay. But it says cover all the costs, not, it covers entire life cycle cost. Okay. It's not that any cost that you have charged off in 1 year, you will not consider it. No, that's the period cost basically. Normally, financial accounting is based on period cost. You charge anything that relates to year one in year one, year two in year two. But life cycle costing says that no, you have to consider the entire life cost. Okay. And second one, it's again, once again, it's very simple that it covers all the costs from inception till discontinuation. That is from concept to withdrawal, that is inception, development phase till withdrawal, decline phase. Okay. Okay. Yeah, but you need to listen, let me tell you. The third point is purely an advantage of target costing. Okay. And it's purely an advantage of target costing, right? So what I was explaining here is that that life cycle costing development phase is where you use target costing. That's it. That's it. Okay. But here we need to find out the pure advantages of life cycle costing. And there are pure advantages of target costing. So it's not that target costing advantages will come under life cycle costing advantages. No, that's wrong. Okay. The only point that I was making here in PERTs is that target costing will be implemented in the development phase of the life cycle. That's it. That's it. Okay, Ali, is this clear now? So this was purely an advantage of target costing, which we can't consider here. Okay. Ali, is this clear? So the answer is 1, 2, and 4. So that's a pure advantage of target costing because both are separate techniques, right? Separate techniques. And the only point I included in PERTs was that target costing implementation is done in the development phase of the life cycle. That's it. Ali, you are not replying me. Is this clear? So now we are done with this question of 20 mark as well. Guys, I've covered 3 topics, theory as well, life cycle, target, and EMA. So what do you think? Is it good? Obviously, a good research will help you in good designing. A good product designing will help you to reduce cost in future. Okay? Umair Khalid, is this clear? Okay. So do you like today's plan about linking the topics and giving you a good recap? Okay. Now, done with this one, done with target costing. Now comes the big gun, and that's throughput accounting. Okay. So now I'll spend my time on throughput accounting, which always creates lots of problems, and I will try my best to make this good today in front of you and will tell you that how it can come in your exam as well. Okay, so let's begin. Now, I'll not be covering ABC costing today because I did cover that in the last webinar. So today, if you see, still I managed to cover 4 topics like target, life cycle, EMA to some extent, and throughput accounting. I'm just left with one, and that I will give you part of $1 Million Plan so that you can just watch that video of last session to cover up ABC as well. And my $1 Million Plans, I think, are really exciting and really useful. So today I'll give you a quick idea at the end of the session how to study the next few days, what plans should be. So stay connected till the end, unless otherwise you'll miss a lot of important things. Okay. Plus I'll share the index of the book with you as well so that you can easily know what to read and what not to read before the examination. So guys, let's now begin with throughput accounting and let's see what are we supposed to do in throughput accounting. So throughput accounting, now there is a concept known as theory of constraints. Just listen very carefully what I'm saying. I'll be using selected content, I'll be using selected content, selective words so that it gives you a good idea. And that's experience. Okay, mashallah. Theory of constraint. What is theory of constraint? According to this theory, every organization has at least one limiting factor. Every organization has at least one limiting factor. Okay, one limiting factor. Limiting factor could be, listen, could be machine hours shortage of machine hours, could be shortage of labor hours, could be shortage of material. Okay, but let's summarize. Two types of question can come in an exam. That what I've seen. One is of manufacturing and one is of service. In manufacturing, mostly I've seen machine to be the limiting factor. Mostly. Okay. And in service, labor to be the limiting factor. So one thing is very important. Mostly what I've seen that in manufacturing, machine to be the limiting factor, and in service, labor to be the limiting factor. Service means hospital. Service means education. Okay. Manufacturing is simple production base. People struggle in service, they are much comfortable in manufacturing. So today, that's why I will solve a question that is of service industry to hit you in the area where you are not good and to make that area strength for you. Okay. Okay. So theory of constraint says one limiting factor. Every organization is facing at least one limiting factor. So to counter, suggested two solutions. One is a long-term solution, that is eliminate the limiting factor. How do you eliminate it? For example, if you have shortage of material, if you have shortage of machine, so how will you eliminate the limiting factor? Can you tell me? Or I'll tell you. You will eliminate the limiting factor. If you're shortage of machine, so what you gonna do? Hire new machine. Hire new machine. Yeah. So that will remove your limiting factor. If you're shortage of labor, hire new labor. Hire new labor. So that will overcome your labor shortage as well. Agreed? That's the long run solution. That's the long run solution. So long run is eliminate the limiting factor. Agreed. Second, what's the short run solution? You don't eliminate the limiting factor, which means if labor is the shortage, you don't hire new labor. If machine is a shortage, you don't hire new machine. Rather, you live in that limiting factor and you manage the limiting factor to your own advantage. You manage the limiting factor to your own advantage. You don't eliminate it. You don't go for further labor or machine, but you live with it and you try to make best use of the current limiting factor. If you have 1,000 hours, so you'll try to use best 1,000 hours. If you have 500 hours, so you'll make sure you use 500 hours in the best way over best products. That's management. That is done in short term. In short term. Throughput is a short term technique, and this is what is done by throughput accounting. Throughput accounting. So the short term solution is throughput accounting, which is based on three concepts. Very good summaries. These are very good summaries. First is throughput, the concept of throughput, that is sales minus all material cost. Sales minus all material costs is equals to throughput, because throughput says what? It says in long run, material is the only variable cost. Only variable cost is material. Okay. Material is the only variable cost. Are you getting my point? So concept of throughput, material is the only variable cost in throughput accounting, and that's throughput. I'll right now not discuss this and we'll jump to the third one, and that's it. It says that if material is the only variable cost, so what you are left with then? You are left with labor, you are left with variable production overheads, you are left with fixed production overheads. So it says that labor, variable production overheads, and fixed production overheads, these all are assumed to be fixed cost. Wow, that's strange. It says in short term, throughput assumes all these to be fixed cost. Fixed cost. So it's direct labor, it's variable production overheads, it's fixed production overheads, and it assumes that to be fixed cost in short term. So according to throughput, the only variable cost is of material. And you combine these three to make operating expenses. Operating expenses. And remember, do remember that this operating expense is only relating to production costs. So it never includes non-production administrative cost. Okay, great, done, fine. Two main concepts of throughput are clear. Material is the only variable cost and the rest is all fixed production cost. Okay, leave this for a while and let's move towards calculation. Two types of question will come in the exam. Throughput accounting ratio, multi-product decision making. Throughput accounting ratio, multi-product decision making. Two types of question can come in your paper. Okay, I'll start first with type 1 question that can come in the paper, which is more common, which is more famous, which has been tested more than the second one. And that is what? Throughput accounting ratio. It's a performance measure for the products. So the ratio is throughput per hour of limiting factor, throughput per hour of limiting factor, okay, divide by operating expense per limiting factor, right? Now, how to work out this numerator? So you have a formula for that. And the formula is throughput per unit divided by limiting factor hours per unit. So this is also per unit and this is also per unit, okay? This is also per unit, this is all per unit. Now, how to find out the denominator of this formula? So the denominator will be worked out by total operating expenses divided by total limiting factor hours. So here both the things are total and here both the things are per unit. Wow, great. Okay, both the things are per unit and here both the things are total. Okay, okay. Now if the answer of TPAR is more than 1, or if the answer of TPAR is less than 1, if it's more than 1 or it's less than 1, if it is more than 1, then in that case the decision is to make the product, and if it is less than 1, the decision is not to make the product. Not to make the product. Okay, more than 1, make the product. Less than 1, not to make the product. Agreed? So this is calculation type 1. So I'll not waste much time now and I'll not be shy to move towards the question here, because I need to give you the very good idea before I move on. My $1 million points, the last $1 million point for this webinar, says that every throughput question that you start, you first need to find out one thing: what is the limiting factor? And remember, there'll be just one, which is known as most limiting factor, the most limiting factor. Okay, most limiting factor. Most limiting factor. Okay, most limiting factor. So identify the limiting factor and now find or given. You are lucky if it is given, and you need to find if it's not given. So yes, in case of not given, there is some problem. I've covered the question of not given in last December 2020 webinar. I'll share the link of that in the million dollar plan. But if it is given, you are lucky. Okay. Once you found out or it was given, whatever the case is, you know the limiting factor now. So what you're going to do is you can identify total hours for that limiting factor that you found out yourself or it was given, or hours per unit, or hours per unit. So identify the total limiting factor hours, total or hours per unit. Okay, getting the point? So once you have found out or it was given, whatever the case is, you find out total and hours per unit for that limit. Just mark my words. Just remember what I'm telling you, people. Done? And then find out selling price and material cost. And if you are able to do all these things while reading the question, I think you almost won the game. Almost won the game. Okay? Right? Great. Okay. So million dollar points clear? Find or given. Whatever limiting factor is, we can call limiting factor as bottleneck as well. Yeah, bottleneck is the other name. Yeah. So find or given, then for that find out total labor hours, total hours and hours per unit for that, and selling price and material cost. So remember these million dollar points. I'm jumping towards the question. Yeah, limiting factor and bottleneck is same. There are three names: limiting factor, bottleneck, limiting factor, bottleneck, constraints. Limiting factor, bottleneck, constraint, all means the same. Okay, perfect. Perfect. So let's not waste our time. Oh, you can't hear me? Is my voice clear to all of you? Don't say that you cannot hear me. Is the voice clear? Oh, that's good. Yeah, that's good. Okay. Okay. Now, having said that, again, if you think you have done this question before, you don't need to. So make sure you don't leave the session, because I will be giving you new ways to understand a new question that comes in the paper. You know, I also know that the question will not be repeated again. I know that. You know that. But what I personally try to do is I try to create people mindset, because every new question that then comes, you know the mindset of that and you can handle it. So million dollar points, do you remember? Yes, you remember. What are the points? Identify limiting factor, find or given. Number two, what tell me, total hours or hours per unit of that. Okay. Third, selling price and material cost. So let's start reading the question. Let's start reading the question. Be with me, everybody. And one more thing. Wow, that's the awesome thing that just came in my mind. And let's add this into limiting factor as well. Million dollar points. Understand the process given in the question. One more thing I've added here. Understand the process given in the question. Process. So what's process? Listen, every question of throughput accounting will include a process. Process either to manufacture the product, okay, or process either to provide a service. Mark my words. Nobody will tell you this. Always a process will be given to you, either to manufacture the product or to give a service. Okay, so let's read and find out the process. Tin Company is a private company offering 3 types of surgical procedures. Okay, offering 3 types of surgical procedures. Okay, okay, known as A, B, and C. Agreed? Each of them uses. Now, these are what? It's a service business, and service business is where people struggle. I'm not saying that the same question will come in the exam, but I will tell you techniques if service business does come in the paper. Rizwan Mania, question solving is not just question solving, it's about learning new techniques. Okay, so remember what I'm saying here. 3 services they offer. The names of the services are A, B, and C. Actually, if this is a manufacturing question, these would have been your products. We do understand products very easily compared to services. Okay. Each of them uses a pre-operative injection given by a nurse before the surgery. Tin Company currently rent an operating theatre from a neighboring government hospital. Tin Company have an operating theatre on its own premises, but it has never been put into use since it would cost $750 to equip. The managing director of Tinco is keen to maximize profits and has heard called something throughput accounting, which may help to do this. The following information is available. Okay, now listen. Listen, all patients go through a 5-step process. Sir, this is what you are mentioning here? Yes, I was mentioning you to find out the process. And this is the process given. Every question will include this. Mark my words. Okay, so what is the process? Anybody who comes for procedure A or procedure B or C goes through the process, and the process is step 1, consultation is with the advisor. Then pre-operative injection is given by the nurse. First you go for the consultation with the advisor, okay, then you move injection given by the nurse, then anesthesia, down, sleep, anesthesia is given by the anesthesiast, then procedure operation is performed, and then recovery person comes and hello, wake up, wake up, wake up, it's morning, good morning, welcome back to world. Okay, so the step is clear. Every person moves like this. Mark my words, always there is a process given. Okay, done. So the price of each A, B, and C prices are here. This is what I needed to find out. Okay, the prices are given to me. So first point of $1 million done. Price is, in fact, 2 points done. Process is clear and prices are here. Then comes the only material cost. This is also was mentioned in $1 million points. Find out the material cost. The only material cost includes pre-operative injection given by the nurse, the anesthesia, and the dressing. So these 3 are your material cost. Done? Okay. Now, there are 5 members of staff employed by Thinco. Each, every time, make sure you do understand the word each. People ignore. Each works a standard 40-hour week, 47 weeks of the year, a total of 1880 hours each per month, per annum, sorry. So staff members are what? Staff members are labor, and labor is what? Labor is part of operating expenses, right? Yeah. So salaries per annum. Great. Now, the only other hospital comparable to factory costs in traditional manufacturing environment are general overheads, which include theater rental costs amounting to 250,000. So this is also part of operating expense, general overheads. It's a service business, my friends. Understood? While reading the question, I am trying to figure out the key things that are important for my calculation. Great. Moving on. Maximum annual demand for A, B, C are given to you. Time spent, very important, by each of the 5 different staff members on each procedure is as follows. Now, advisor consumes 0.4 hours on each procedure of A, B, and C. Nurse uses 0.27 hours on A, 0.28 and 0.3 B and C respectively. Like anesthesia person, like surgeon, like recovery specialist. Thank God. Surgeon hours have been identified as the limiting factor. Thank God this is given. Okay, great, done, perfect. Now, it's time for another break. It's 10:35. Don't leave. It's the last break for the session. See you at 10:40. Hey, welcome back. Now, let's begin with the last session after the break. Okay, now the questions are here. It's a scenario based question. Obviously, you know that. And calculate throughput per unit, calculate throughput per hour of limiting factor, calculate TPAR, rank in the order of importance, and calculate maximum profit. Okay. Now we know the limiting factor, so that's all done. It's given. Now the key thing is we know the selling price, we know material cost, we know the process. Okay. So in this process, we know surgeon is the limiting factor. Surgeon is the biggest issue. Now for the limiting factor, I need to find out total hours and hours per unit. Total hours and hours per unit. If I'm able to do that, then things will be a piece of a cake for me. Okay. So uh, first a person goes to advisor, then goes to nurse, then anesthesia, then surgeon, then recovery specialist, right? This is the flow. Okay, is this the flow? Yeah, this is the flow. So in this flow, surgeon is the most slowest process. Surgeon is the most slowest process. Surgeon is the limiting factor. Okay. Now, according to $1,000,000 technique, if you have found out the limiting factor, do find out its hours per unit, because it's not a manufacturing question, because it's a service question. So you can't expect units to be here rather than services to be here. And if it's services, so expect procedures as your units. So this is what is given: hours per procedure for A, hour per procedure for B, hour per procedure for C, and yes, these are the hours per procedure of surgeon. So once you have found out the limiting factor, find out the hours per procedure for the limiting factor, and that is surgeon. So that's done. Hours per unit. This is equals to hours per unit. Agreed? Our procedure is equals to hours per unit. And the second thing that $1,000,000 was asking you was to find out the total hours of the limiting factor. Total hours of the limiting factor. So you know that surgeon is the limiting factor. So you need to find out the total hours for surgeon then. Okay. So how to find the total hours for surgeon? Anyone can tell me how to find out the total hours for surgeon? Okay. So what's the answer? Quickly, quickly, quickly. Total hours for surgeon. Anyone? Audio. Okay, just wait, just wait. Let me just fix. वापस से इस पे ले जाओ वापस से. Is it on? Can you hear me, everyone? Okay, great. Now, total hours of surgeon. Total hours of surgeon. Now, just read this very, very thoroughly. There are 5 members of the staff employed by Thin Company. Every person works for 40 hours a week. Okay? And 47 weeks a year. Each person works for 40 hours and 47 weeks of the year, which is what? That's simple. 40 into 47 is what? It's 1880 hours, right? Okay. So I need total hours, I need total limiting factor hours of surgeon. Whatever is the limiting factor, you need to find total hours of that particular limiting factor only and not for all. So out of 5, as surgeon is the limiting factor, so I need hours of surgeon only. Now, what is the answer? What is the answer? Let me give you options. Is the answer 1880, or is the answer 1880 multiplied by 5, or is the answer 1880 divided by 5? What the answer is? So the answer is 1880. Very simple. Very simple. Because the word each has been used. Each 5 staff, right? Each person works for 1880 hours, which means advisor also works for same hours, nurse also works for same hours, anesthesiast also work for same hours, surgeon also works for same hours, recovery specialist also works for same hours. All 5 works for same hours, right? So yes, we need surgeon time. So the surgeon time is 1880 hours because everybody works for same hours. So surgeon will also work for same hours. So it's 1880. Clear? No issues at all. You should not have any issue. So the total limiting factor hours, you have to take surgeon hours only, limiting factor hours only, and that 1880. So all the things done as per $1,000,000 points. We know the process, we know the limiting factor, we know limiting factor total hours and hours per procedure, we know the variable cost, that is material, and the selling price. Is all set to start the solution. The first is calculate throughput per unit for each product. So do I have space here? No, I don't have space here, so I need to open some, yeah, OneNote. Let's close this. Okay, let's start. So procedure A, procedure B, procedure C. The first is throughput per unit. Okay, let's work out. Now, throughput per unit or per procedure. So it's simple. 2700 minus the cost. 700, 35 and 5.6. So if I add these all together, so that makes 740.6, right? 740.6. Okay. Second, 3500 minus, if you add all these three together, so that makes 845.6. Please, I need answers from you people of throughput per unit, okay? Third, it's 4250 minus 150.5, 150.6. Okay, can you give me answers? No answer at all. Oh man, I need to work by myself. That's bad. 1959.4. Second, I want to save my time. 2654.4. Third, 3199.4. Throughput per unit done. Okay, clear? Great. Now, what's next? Find out throughput per hour of limiting factor. Find out throughput per hour of limiting factor. So how to find out that is simple. The formula is pretty much clear. Throughput per hour of limiting factor. Here it is. How to find out? Throughput per unit, divide that with limiting factor hours per unit. Throughput per unit, divide that with limiting factor hours per unit. Okay? Throughput per unit, divide that with limiting factor hours per unit. Right? So, throughput per unit, I already have. Divide this with limiting factor hours per unit. So, I know the hours per procedure. Yeah, I do know the hours per procedure. And what? Yeah, it's given 0.75, 1 and 1.25. 0.75, 1 and 1.25. Okay. So once you divide this, you will get throughput per throughput per hour. Okay. So before I ask you and you tell me with a delay, let me work out by myself. So the first is 2612.5. Second is 2654.4. Third is 3199.4 divided by 1.25. And it's 2559.52. Okay. Throughput per hour done. Okay, no issues. Now, calculate TPAR. Okay, how to calculate? Let's go back to the slides and let's see. Because I know the numerator now, so let's now find out denominator, which is operating expense per hour of limiting factor. So it's operating expense total divided by total limiting factor hours. Okay, operating expense total. So operating expense total is what I need to work out now as well, right? So where is operating expense total? Let's find here. Yeah, here I am. And all this is part of operating expense, right? So it's 45,000 plus 38 plus 75 plus 90 plus 50. Okay, right? Right. Now, what else should I add in this? You should add this 250 as well. Are you sure? Yes, because this is also part of operating expense. So the total of this is how much? Can anyone of you tell me? Finally, I've received the right answer, and that too quickly. 548,000. Agreed? 548,000. Okay? Great. I hope this is clear to all of you. Are you all following me, right? Okay, so it's 548,000. Right. Now, operating expense per hour. So it's 548,000 divided by what? Divided by what? Now I need to take limiting factor hours, right? Yeah, obviously. You have to take total limiting factor hours. Total limiting factor hours. So what is the amount of total limiting factor hours? It's it's the surgeon time. The surgeon time only, okay? And what's that? It's 1880. Yeah, 1880. So yeah, 1880. And what is the figure? Someone 548 divided by 1880 makes 291.4. Now, is the figure same for all the three products? Yes. Why? Because it's an operating expense and this is assumed to be fixed in nature. So anything that is assumed to be fixed in nature will be fixed for all the three products. Okay. So it will be fixed for all the three products and will not change. Yeah, that's good. So done with this one. And it's time to work out TPAR. So the formula is pretty much clear, obvious. We have the numerator now. Okay, operating throughput per hour of limiting factor. We have the denominator, operating expense per hour of limiting factor. Okay, so let's divide and work out. Come on, who will tell me the answer for the first one? The first one, 8.78. Okay, 8.96 for A. Do write the procedure name, please. Second, second, 9.1 for procedure B. And 8.78 for procedure C. Righto, done. So this is throughput accounting ratio. This is CPAR. Now, do you know what this indicates? Many of you don't know what this indicates. People only know, okay, this is how we take a decision. But if someone asks you what this indicates, you don't know much about it, okay? So, what it indicates, let me tell you. What it indicates. So listen, it's very simple. It's very simple. The shortage is of certain hours. How much certain hours do we have? 1880. Okay. So listen, if I spend, now you need to remember this basic thing. Whatever is the limiting factor, decision will be taken on that only. Okay. So listen, if 1 hour of surgeon is spent on procedure A, which means if surgeon spends 1 hour on procedure A, so it will give you an earning or return. Return, we also call this as return per hour. So you will get a return per hour by that 1 hour of this amount. If you use 1 hour of surgeon on procedure B, so it will give you a return of 2654.4. And if you use 1 hour of surgeon on procedure C, so it will give you return, throughput, income of 2559.5. Okay. So what you have worked out is return per hour, throughput per hour. And you have all these three figures in front of you. Getting the point? Great. Now, the per hour returns are in front of you. So now you compare with the cost per hour of limiting factor. Cost per hour limiting factor. Everything is based on limiting factor. These are also limiting factor hours, right? So per hour cost is 291. If you spend 1 hour on A, it's 291. If you spend 1 hour on B, it's 291. If you spend 1 hour on C, it's 291. Now, if you spend 1 hour on A of surgeon, so the income is this and the cost is this. This is also known as cost. So the cost is this. If income is greater than the cost, which is the case here, so the answer obviously will be more than 1. Will be more than 1. Because if the income is more than the cost, this means it is easily covering the cost. Second, for procedure B, if the income is more than the cost, the return per hour is more than the cost per hour. So it's easily covering this and the answer will be more than 1 because numerator is higher than denominator, you get answer more than 1. Third, if the return of procedure C is more than the cost of procedure C, which is the case, so the answer is more than 1. So whenever the answer is more than 1, it means what? The return per hour is more than cost per hour. Remember, this is also per hour and this is also per hour, and that's why it's a like with like comparison as well. So if the return per hour is more than the cost per hour, if return per hour is more than the cost per hour, it's viable to produce the product. So do understand the logic. What is TPAR? It's basically a comparison between return per hour and the cost per hour. If the product return is more and covering the cost easily, yeah, it's viable. Yeah, same for service as well. Right now it's service, right? So the answer is more than 1, which means the cost is being easily covered by the return per hour of that service. If it's less than 1, obviously, the cost is not being covered. The return is less than the cost, so answer will be less than 1. So right now, out of the 3, the best performance seems to be for B, as TPR is highest, followed by A, followed by C. Done? Clear? Any issue? Concept clear? Okay? So now you know what is TPR. It's a comparison between return per hour and cost per hour. Done. Now, rank in order of importance and calculate maximum profit. So listen. The other type of question that can come in your exam is multi-product situation. Okay? And you should know the steps of that. First, calculate throughput per unit. Okay? Second, calculate throughput per hour of limiting factor. Third, rank based on this. Fourth, prepare optimum production plan. Okay? Okay. So, multi-product situation is what? Multi-product situation means that when you have to decide between 2 products, 3 products, which you have to make. Okay? Which products to make first and which to make after that. Righto? Clear? So optimum production plan, and these 4 steps are known as multi-product situation. So now let's do this working. Already you have worked out this, so you don't have to perform this calculation again. Let me show you. Done with this throughput per unit stuff. Here, throughput per unit done. Okay. Second, throughput per hour of limiting factor. Already you have done this calculation as well. Here, step 1, step 2. Okay. Third, rank on the basis of throughput per hour of limiting factor. Per hour of limiting factor. Right? So now ranking comes. So let's rank here. Okay. Based on this throughput per hour of limiting factor. Now, which product should we make first based on throughput per hour return? First, B. Second, A. Third, C. Okay, agreed? First, second, third. Right? Ranking. Optimum production plan. What is this? The best plan. The best plan as to which products or services should be produced or provided first, and that ensures maximum profit. Maximum profit. Now, as we have done the ranking here, it's time to prepare our optimum production plan. Step number 4. And what's that? So I know as per the ranking what will be my priority for procedures. First I'll go for B, then I'll go for A, and then I'll go for C. So let me look at the demand of these first. So I have this info given in the question, and that is A 6, 8, and 12. So it's 800 for B, 600 for A, 1200 for C. Now let's determine the hours required of surgeon for these. So let's multiply 1 hour for B requires 8 hours altogether, 800 hours, sorry. For A, 0.75, which means requires 450 hours for A. Third, 1.25. Okay, clear? So this means you need 1500 hours for C. So altogether, you need 2750 hours. Righto? Okay. Now, do you have availability of these or not? This is my question. No. How much do you have of surgeon? It's 1880 hours. And that's where limiting factor comes into play. Right? That's where limiting factor comes into play. Agreed? Okay. Now, what will be the distribution of hours? Obviously, the most profitable, the highest return stuff is B. So first, let's assign hours to B 800 completely for entire demand of this. So the procedures will be performed will be 800 as well. Okay, perfect. Now, second, assign all 450 hours to A as well. So how many procedures of A will we be performing all together then? Obviously, if 450 were awarded, so 600 procedures will be done. Great. C requires 1500 hours. So if you assign 1500 hours, but you don't have, oh, why? It's done, finish. Okay, how many are you're left with? Let me tell you. This minus this 1880 minus 800 minus 450. So you're left with just 630 hours for this C. So this means you were required to have 1500, but you could only give 630. So how many procedures can be performed for this poor C? So one C requires how many hours to produce? It requires 1.25 hours to produce, right? So this means 630 divided by 1.25 means you're only able to perform 504 procedures for this poor procedure C. Agreed? 504. Divide, you have to divide it, okay? Not multiply or something, divide. So that this is the best plan. This is the best plan. We haven't eliminated the bottleneck. We didn't increase surgeons. Okay? This is optimum plan. Righto. Clear? Now, what else do we need to work out? The maximum profit. Is it difficult? No, it's not. How I'm going to work out the profit? Come on. Any idea? How I'm going to work out the profit? Yes, please. Any idea? Okay. So profit, I need to work out. So how I'm gonna do this working of profit is simple. I do have procedures now, and if I multiply this with throughput per procedure or per unit, do I have that figures available? Yeah, I do have. See, for A, for B, and for C. So for B, make sure you pick the right figure. For B, it's 2654. Okay. And 1959.4 for A, and 3199.4. Okay. So if I'm able to multiply procedures with throughput per procedure, so I can work out what? Total throughput. Now I think I need to do working by my own. So it's 2123520. Second, It's 1175640. Okay. And it's 1612498. Righto? 2123520 plus 1175640 Yeah. 1612498. So that all together makes 4911658. And that's the total throughput. So can you tell me how to work out the profit now? How to work out the profit? Yes, friends. No, my figure is correct. How to work out the profit? Let's deduct operating expenses from this figure of 548,000, and you are able to work out the maximum profit based on optimum production plan. Here is the 548,000 figure available. And what is the final answer? If anyone can help me out here. If no one will do, then I need to do workings on my own. And I've done that. 4363658 is the profit. So two types of questions can be tested for throughput accounting, and I have covered both the types through one question. I've covered both the types through one question, okay? Done? Clear? Now, there are certain important things that I need to tell you here. Is the answer clear to all of you? First of all, confirm please so that I can proceed ahead. How we got 504? There is no 504. Okay, this 504. 630 hours were left, and to produce one, we require 1.25 hours, right? So if one requires 1.25 hours and total 630 you have, so if you divide this, so you end up with 504. Okay, Umair Khalid. Okay. Righto. So now this is clear to all of you, right? Now listen, done with the calculations as well. One thing I need to tell you here, you're done with the figures, right? You're done with the figures. Yeah. Now, what I need to tell you here is that the ranking that you did based on throughput per hour could also have been done through TPR per hour. Now your question is how I got 548,000? Oh man, that's so simple. 548,000 is the operating expense that I already did work out earlier here. See? $548,000 here. Okay. Okay. How did I get 660 for 450 hours? 660 is never written here. I don't know what your question is. 660 for 450 hours. No idea what are you asking. Okay, now this one you are asking. Okay. Demand is 600. For that you need 450 hours. So if you give 450 hours, so obviously you will be able to complete 600 entire demand. That's it. Okay. So is this clear? So 600, 450 hours. I think admin should remove this student here because the kind of language he's using, that's so pathetic. I'm replying to each and every student here one by one. This is totally ethical language that you're unethical language that you are using here. Okay. You try to make sure that there are ethics that you have to follow. Okay. So I definitely need to raise this issue with ACCA as well, the kind of language that has been used here. Okay, now I'm replying to each and every questions one by one because it takes time. Now you can see here what it says. So it's 650 the available hours are 650 and you can perform 600 procedures only. Okay. So you don't have to do any calculation for this one. You don't have to do any calculation for this one. It's logical, same as it was for this one. Right? No, you really need to apologize ACCA for that as well, to be honest. It's a live session going on, and the kind of language that you have used here, it's not at all acceptable. So I would ask ACCA to look into this matter on a serious note. Okay. Now, as of 548,000, it's totally given to you. In the question, I did mention earlier as well. This is 548,000, and this is the fixed cost that is available here. Okay, done with this one. No issues at all. Now, further ahead, one thing that I wanted to tell you that's very, very important, that's very, very important is, just listen what I'm saying here. The ranking that you did by using throughput per hour is exactly the same ranking that you will achieve through TPAR. Okay, it's exactly the same ranking you did with TPAR. Are you getting my point? And why is that? And why is that? It's very logical. It's very, very, very logical. It's very logical that, see, here you are getting first, here you are getting the highest TPR. This is second, this is also second. Okay? This is third, this is also third. Now, the ranking that you got is exactly same ranking. Is exactly same ranking. You know why? Because the cost per hour is exactly same for all the three. And it's logical. It's logical that if numerator is high and denominator is same for all, so the answer will also be high. Okay? Because if the throughput per hour, is high here, so TPR will also be high. Okay, TPR will also be high. And in case of second one, if throughput per hour for the second product is on second number, so TPR answer will also be on second number. Getting the point? Okay. So as the cost per hour is same for all, as the cost per hour is same for all, cost per hour is same for all, so the final answer will be same for all because the numerator matters. The more throughput, the more TPR. The less throughput, the less TPR. So because third product throughput was less, so the TPR will also be less. Getting the point? Okay. So you can, it's up to you. You can do the same ranking. You will achieve the same ranking through TPR as well. Okay, is this clear? I hope this is clear to all of you. Right? Done? Okay. Now, I'll jump towards the closure of this topic now. Admin, if you can hear me right now, please can you call me? I need to discuss one thing on an urgent basis. I might take 10 minutes more as well to round up the session and to discuss important things with you people. So if you just call me, so I need to discuss one thing. Okay. Right. Now, how to improve TPAR? How to improve TPAR? For example, if for any product, you need to improve the throughput accounting ratio. So let me clear this all stuff from here so that it is easy for you to understand. Okay, now, if you want to improve any product TPAR, right? So what you need to do? What are the ways? And I'll make this really easy for you. Okay, just be with me. Decrease the material cost per unit. Just listen, just listen. If you decrease the material cost per unit, somehow by getting a discount or something like that, so what will happen? Your throughput will go down. Throughput per unit will go down. Okay, sorry, not this one. Yeah, throughput per unit will go down. And if your throughput per unit goes down, so obviously your throughput per hour will go down. Okay, your throughput per hour will go down. So if throughput per unit goes down, throughput per hour goes down. Sorry, I beg your pardon because of that big distraction. This is really something. Anyways, now let me repeat this again. Because your material cost, just listen very carefully, okay? When the material cost per unit goes down, I beg your pardon, the throughput will increase. As your cost goes down, your income increases. Okay, so your throughput per unit increases, and once your throughput per unit increases, your throughput per hour will increase. And yes, if throughput per hour will increase, your TPAR will increase. Are you getting my point? Yeah, clear. Okay, so I mistakenly used the wrong word. So if cost goes down, throughput increase, throughput per hour increase, and TPR will increase. Okay. Second, uh, operating expenses. Now listen, if you reduce your operating expense, okay, so if your operating expense gets down here, so it reduces what? It reduces your operating cost per hour. Agreed? If cost goes down, so operating cost per hour will go down. And if your operating costs per hour go down, so your throughput accounting ratio will improve. Right? Getting the point? Clear? Yeah, quality cannot be compromised. Yeah, quality cannot be compromised. Make sure you are clear about this. Quality cannot be compromised here. Right? Done. What's the next way? Increase the selling price per unit. Just judge the impact. If the selling price per unit, goes up, so it will improve your throughput per unit. It improves your throughput per unit. And if throughput per unit goes up, your throughput accounting ratio will improve. Okay? Clear? Right? Okay. That's it. Now, next, the last is what? The last is decrease the time to make each unit. That's important. If decrease the time to make each unit, that's important. Listen, everyone, that's important. If per hour, if hours per unit are reduced, if you reduce hours per unit, right? If you reduce hours per unit, okay? If you reduce hours per unit, so obviously this will do what? This will improve your throughput per hour. And if your throughput per hour goes up, your throughput accounting ratio will improve. Okay? So now, these are 4 techniques through which you can improve TPAR. Now, do you want me to make it easy for you to learn? Yes or no? Yes? You want it to make it easy for you? So let me tell you. No. Number of units will not have an impact on to throughput accounting ratio. Yeah. Number of units increase will not have any impact. Okay? Okay. So let me tell you how you can learn this. See. Come on. Can you make a mnemonic here for me? A last gift for you people. Can you make a mnemonic here for me? I've highlighted 4 things. Yeah, that's perfect. The mnemonic is most. M for reduction in material cost. O for reduction in operating expense. S for increase in selling price. T for reduction in time to make each unit. Right? Like the mnemonic, everyone? Okay. So 3 mnemonics were discussed today. Right? So I hope this is clear to all of you. And that's very important to keep all this in your mind. I've covered a lot of things today so that it becomes easy for you for your examination. And I hope this all will help you in your paper as well. Now, the time is already up. So I just want to, now I'll share these OTs. Listen, I'll share the list of OTs. These OTs are one that were tested in your exams, and these were the difficult ones. That's why ACCA examiner have mentioned these in examiner report. ACCA examiner mentioned these in examiner report. So the ones that are difficult are mentioned by the examiner always in examiner report. Okay, always mention in the examiner report because these are tough ones. So what I'll do in WhatsApp group now, through WhatsApp group, I will share with you people that these are the important ones that you have to keep in your mind and do solve these. Every communication will be done through WhatsApp group. Okay, great. So I've just sorted them out. I just what I've done, I've just made them all together and I'll share with you. Right now, further plan for the next 5 days. Sorry, for the remaining days. We are done with all the 5 days webinar. Now listen, please, everybody, this is important. We are done with all the 5 days webinar. If you have missed any, do watch it. The links will be shared on the WhatsApp group. It's also available on Vimeo as well. Okay. $1 million plan I've shared for 4 days. We'll share for day 5 tomorrow. So the plan is very important. If you cover these $1 million along with these, if you cover these $1 million along with these current 5 webinars, then majority of the areas will be covered for examination. Okay. Tomorrow is grand revision. I'll share the link in the WhatsApp group. Tomorrow is grand revision. I'll share the link. It's very important for everyone. I'm going extra mile for you people. Extra mile. I'll go for a quick revision. We'll cover up the paper revision in 3 hours, and in 3 hours I'll cover up entire PM for you people. Okay. Chapters to read from book, I'm just sharing now the names. The rest cover through my slides that have been emailed to you. For information technology, I'll share the link through $1 million plan. I've covered this last time, so I'll give you the link for information technology as well. Okay, don't worry. Now, this is important very much. So now, today, or maybe tomorrow, I'll share the detail of these mock-based sessions. If you want to get into these are paid ones, so you're most welcome. That will help you to pass. Okay. So I've made the plan clear to all of you what to do next. Now, this is the index of the latest book of BPP. So chapter 1 you must read. Chapter 2 you must read. Okay. Then chapter 15, chapter 12. These are those from where theory will come. Environmental accounting and this one. So it makes 1, 2, 3, 4, 5, and 6. 6 chapters you have to read. 6 chapters. Okay. Right? Clear? That's fine. Done. So these are chapters to read must. Now I'll share the link of target costing, ABC costing, and information technology through $1 Million Plan. Agreed? So do follow that. Tomorrow we have a revision, so make sure you're part of that as well. Okay? Now, remain positive. Positivity is important for the success. If it is your second, third attempt, forget what has happened in the past. It's a fresh attempt. It's a fresh exam. It's a fresh day. It's a fresh webinar. It's a fresh opportunity. Everything is fresh. Positivity is extremely important, my friends. Rizwan Mania will try his best to help you till the last day through the WhatsApp groups. So you have to be active there. Okay? If you have parents in this world, ask them to pray for you, because parents' blessing results in awesome things, right? So ask them to pray for you so that you pass. And your own effort and your own dedication and your own commitment will give you a huge success. Huge success. Okay? So, my friends, never lose hope. In examination, you have to complete the entire paper. Just the objective is to complete the entire paper. Entire paper. Okay? Now, if you have any questions to ask, please, you may carry on. No, if it is an OT question, so you have to follow the entire instruction. If the answer needs to be in entire thousand figures, so you have to input all the figures. Okay, so you can't round it off to 291.5, right? Okay, now guys, thank you very much. I need your quick feedbacks for my own understanding how these 5 days were. I've thought a lot about the topics and how to cover the things. I tried my best to cover maximum important areas. I did ask you people as well. I covered Excel, Scratchpad, typing, did everything. So can you give me your feedback as to how these 5 days were for you? And did you like the sessions or not? What all the sessions were fruitful for you? I need your feedbacks right now, please. Can you share the feedbacks? Overall coverage, concept, confidence building. How were these 5 sessions? Your feedbacks, please. Yes, please. I need your feedbacks. Please, can you share your feedbacks? All 5 days, the coverage. Are you confident or not? I'm sure these 5 days will definitely help you to pass your exams. So everybody, please just share your feedback in relation to all the 5 days. Okay. Thank you very much. It means a lot. It means a lot. So thank you very much for the entire feedback. A quick thing. Uh, once once the session ends, once the session ends, okay, please. Thank you very much for your feedback. Once the session ends, after the session, ACCA feedback form will appear in front of you. Please do share your feedback with ACCA. It's very important. Thank you very much to ACCA Pakistan for giving me yet another opportunity. That is 13th time I'm doing this webinar. 6 I've done for advanced performance management before. 7th was this performance management. Because of all your love and feedback, ACCA gave me this opportunity again. So thank you very much to all of you friends and ACCA Pakistan for giving me such a good opportunity to interact with you people at global level. So thank you very much once again, guys. I hope these 5 days definitely went well for you. A small request, remain connected through WhatsApp group. My number is very clear. If you are not part of the group, you can send me quick WhatsApp message and I'll definitely add you in the group. Okay. Secondly, a small request right after the session, feedback form will appear. Please just spare 1 to 2 minutes. I hope you can do this after 17-18 hours I've spent with you people. So whatever your feedback is, do share your feedback with ACCA Pakistan. Thank you very much. I hope you all pass. I wish you best of luck for your examination. Stay connected with me through my WhatsApp group for all the updates till the exam day. Rizwan Mania will be with you till the end. Thank you very much. Thank you very much being good audience. Take care. Bye.